We are back kicking with the Rickens, everybody. Welcome to Kicking with the Rickens, redefining retirement. I'm your co-host, Doug Turnbull, official podcast host, here with the licensed insurance professional, Gerry Ricken, and investment advisor representative, Heidi Ricken-Provost, the gruesome twosome, the 1-2 punch here for finance in Missouri and all your retirement planning needs. Give them a call, 314-442-6476, or go to rickenfinancial.com and check them out on the socials, Facebook and Instagram as well. And I'm starting here with a smile and real jumping in with enthusiasm like we always like to, guys. But I know it's been a tough go lately. Y'all have had to not only navigate storms, but also a big loss in the family there. So, Gerry and Heidi, welcome. So glad to be with you, but I wish it was on better terms.
Hey, thanks, Doug.
We are okay, Doug. We are okay. Bob lived 96 and a half years.
So for those of you who are not aware of who passed away, my mom's dad, so my poppy, as I called him, or my dad's father-in-law, Bob Kriegshauser, he just passed away after 96 and a half beautiful years, close to 73 years of marriage with Grammy.
Oh, my gosh,
he had
incredible.
14 grandchildren, 6 daughters, all girls, God bless him. He was surrounded by lots and lots of estrogen. And then he had 14 grandchildren, 10 of them girls, so 4 boys. And so far, 14 great-grandchildren, the 15th on the way.
That's incredible.
And one of them's a boy.
That is wild.
14 and 1 on the great-grandchildren.
So
There's lots of girls in our family.
We got lots of strong women in the Kriegshauser side of the family.
That's right.
That's incredible. Yeah, and that's right ahead of your women's seminar that as this show drops, you all are holding right now and have a bunch of people signed up for. And in our next episode, by the way, we're going to talk about another special opportunity you have to, well, hang with powerful women, Heidi. So we look forward to that.
Absolutely.
Now, Poppy lived 96 and a half years, correct?
Yep.
Oh, yes.
Okay. Yep.
Most patient human being I have ever met in my entire life.
Okay.
No question about that.
And you have to be with so many women around, right? Is that right, Gerry? So
that's exactly right.
Hey, I know it too. I'll admit it. He was patient with all of us.
He was very patient.
Well, Godspeed to him. And it's one of those, if you're going to live that far, just basically, I mean, just pass in your sleep, right? I mean, did he have any big long battles or anything, or is he just?
He had been, hospitalized or in and out of, hospitalization or rehab since November 17th. So
the last few months were pretty rough.
Yeah, he was ready.
You don't want to see someone you love like that suffering. So as tough as it was to say goodbye, I think all of us have found peace and solace in knowing that he's no longer in pain, Well,
amen to that. Godspeed to him. Mm-hmm. And I know faith is a big part of your journeys as well. So I'm sure you had a lot to reflect on there and catching up with family this past weekend and doing so in and out of power outages and storms as well. That same storm system came to Georgia, but didn't do to the Peach State what it did to the Show Me State. My goodness.
Yeah.
I know it was a widespread one, wasn't it?
Yeah.
Hey,
we're all safe. We did have to reschedule 2 appointments this week because we had some prospects who were supposed to come see us that have lots of damage. So we're thinking about them too. And
absolutely,
Midwest Strong, we'll get it put back together after the tornadoes.
And I've got a cousin in Florissant there, and I saw that a tornado had hit Florissant. I was like, oh my gosh, man. And he said it literally hit like one street over from him. So,
of course.
Yeah, it's crazy how that works. Well, there's no easy transition into taxes after tornadoes, okay? Except maybe
they both begin with T.
They both feel you hurting afterwards. But we have been doing basically, I think it's 6 parts now of a series on tax diversification. Most recent episodes, we covered tax loss harvesting and municipal bonds. And then the episode right after that was installment sales and cost segregation. You can find them on the Ricken Financial YouTube page and also on Apple, Spotify, some of the other podcatchers, and rickenfinancial.com. And today we wrap this up. As much bad news as we had, and I know, or bittersweet news as we just let off the show with, we wrap up with something that I hope, Heidi, can make us smile, and that is tax-free retirement.
Hey, everyone wants to retire without paying tax, so it better make all of us smile. And, it's funny because so many people come to us and they're like, taxes are the most painful part of our retirement, of our financial planning. And I'm like, I love talking tax. And our goal is to make it fun. So
you do.
as painful as it may be in your eyes, put the hard work on a professional like us so that in the end, all you have to do is work the plan and it can be fun for you guys.
But you have to plan your work first before you can work the plan.
Yeah, absolutely.
And planning your work really means, how do you retire tax-free?
And what we want to talk about today is it's a type of a plan for your financial future where you don't pay taxation on the income in this plan, but you have to have time and you have to have discipline in order for this to work. And that is what we affectionately refer to in this industry as tax-free retirement. Because the book, Tax-Free Retirement, was written by one of our buddies in the industry, Patrick Kelly, who talks about what this type of plan is.
And it has to do with using life insurance. When people say life insurance, why would you ever use life insurance? That's a terrible investment. It isn't about the investment of life insurance. It's about the tax
benefits of life insurance as an investment vehicle.
Because life insurance is treated differently in the Internal Revenue Code than any other financial instrument. You could put after-tax money into it. It grows tax deferred. You pull it out tax-free. And after you're gone from this earth and join Poppy, the death benefit comes to your family tax-free, to your beneficiaries tax-free. So it becomes a tax-free instrument for the rest of your life. But the cool thing is you can design it so that it can provide tax-free income in retirement or tax-free chunks of money in retirement when you need it the most.
So what we're talking about is totally flipping the game on life insurance. Think about life insurance. So many of us, when we think life insurance, we automatically say, okay, I want to pay the smallest premium possible for the highest death benefit because you're buying life insurance for death. This is utilizing life insurance for living benefits. So what you do is you have the most amount of premium you possibly can for it to fall within the confines of the IRS for the smallest death benefit so that you can utilize the cash value of your life insurance and pull it out tax-free at any point in time so that in the future you can have some tax-free income. And remember, we're talking tax diversification here. So this is not going to be all your eggs in one basket here. And, say you're working right now and you're in your 30s and you want to retire by 50. Well, if all you're doing is putting money aside in your employer-sponsored plans, whether they be Roth or traditional or anything else, you have to wait till age 59 and a half to touch those for them to take the tax benefits of it. So if you're putting all of your money in Roth right now, which I'm going to give you a big thumbs up if right now you're contributing into your Roth and you're working and you're in your 30s, because we know that you're saving on taxes in the future if it's in Roth right now. But any of those gains you can't touch till after 59 and a half or they become taxable. So how do you diversify the risk there so that if you want to retire before 59 and a half, you have some cash?
One of the things we always encourage people to do is get the match from their employer's 401k. So you put your Roth money in to the extent of the match. You get 100% of the free money that your employer is going to contribute to your account. But then anything above that, you could put into the tax-free retirement plan. And let's say you have a couple that are in their, almost 30 years old. They want to put about $1,000 in each month. And they wanted to retire earlier than 59 and a half. As Heidi just talked about, 59 and a half is our magic number there.
Yeah.
So to get tax-free retirement income before 59 and a half, you can put about $1,000 in a month and then maybe get around $40,000 at age 50.
So that means pulling about $40,000 a year tax-free, income at age 50.
To live on and to pay your expenses. And that's just one piece of what you could do.
And that would be from a Roth account, like if they're contributing to Roth or maxing to 401k?
This would actually be from the tax-free retirement plan, the IUL, or Index Universal Life Policy, where we buy the least amount of death benefit, put the most amount of cash in it, because the IRS limits the amount of money we can put into these things, because we put a minimum amount of death benefit on because we want to strip out as much cost as we possibly can and use this as an investment tool to produce income for the future. So when we do that, we fund it over a period of time, and then you can take money out as an income stream, Or you can take money out periodically for a down payment on a home, to pay off a car, to fund education, those kinds of things.
So say right now you're in your working years and you want to utilize some sort of tax-free retirement plan like the concept we're talking about right now. You could put some money above your match into a plan like this. And if you need a down payment on a home, you can take a chunk of money out of here without having to pay tax on it. If you want a stream of income before 59 and a half, you can take some money out over the course of time, and it just gives you a little bit more flexibility in your financial future than the confines of a Roth or a traditional IRA where you have to wait till 59 and a half, has to be there for 5 years, yada, yada, we know the drill. But that's just one way a plan like this could benefit you financially for the future. But the other thing that these plans do is if you're in your retirement and you want to leave a legacy behind for your family in the future, you might be able to utilize a plan similar to this to leave a couple different generations of your family members some tax-free retirement income.
So we look at this as ways to fund things in the future. And one of the things that is really out there for a lot of people is the looming thing of paying for long-term care.
Right.
Benefits. Right. Okay. Paying for long-term care is a huge thing for a lot of people. So what you could do is put a plan like this into place and have it grow, and you'll be in total control of it. You may not be the insured on the plan because you're older. We'd have a younger individual in your family being the insured. You're in total control of the plan. And if you never need that money for long-term care, the money stays in the family. And it provides a tax-free income stream for your beneficiary, for your child, and then for your grandchildren, your future grandchildren, if they're not even here yet, in the form of a death benefit that comes tax-free. So we can build generational tax-free plans by just using one plan.
Well, and you mentioned it too, but there's all types of different life insurance out there. So the tax diversification piece that we're talking about today is utilizing life insurance to diversify your tax risk in your financial future. So if this sounds like something you want to explore, obviously it's going to be built out, completely personalized to you, because life insurance has to be underwritten medically on whoever would like the life insurance benefit for their financial future. So when you look at that, you're going to have to meet with us, unfortunately, and talk to us about your specific situation to see if this fits into your plan. But if it's something you want to chat about, just give us a call at 314-442-6476 or head on over to rickenfinancial.com, RICKEN. And, just say, hey, can we chat about this? Can we run some numbers? Does this fit into my financial future?
And do I qualify for it?
Exactly,
Sure.
Because every single person is going to be completely different and have a different answer here. So it might be something that you can utilize in your working years right now to help you benefit financially for your future. Or if you're retired and, you want to explore some different ways to pass income on to the future, or create multi-generations of tax-free income, it might fit into your plan. If you want to utilize life insurance for the living benefits of long-term care, it might fit into your plan to diversify that tax risk too. But every person's going to be completely different. So give us a buzz to see if this fits into your plan.
We want you to know what's available out there, because not a lot of people are talking about this, but we want to talk about it because it is one way to diversify your tax risk.
Well, for sure. We definitely don't want all your eggs in one basket, as you all said before. And look, when I think of life insurance, really, I think of death insurance. I think of, okay,
Exactly.
Because maybe it's just seeing too much true crime stuff over the years, but really that's what you think is, oh, he's got a $250,000 policy and suddenly, what happened, right? So I had no idea until speaking with both of you that there could be so many benefits while you're still alive, and then it could benefit future generations just depending on what plan you get. So definitely important to make that call for sure.
You need to work with someone who knows how to design the plans.
Yeah.
Because these plans are specifically designed for you to meet your goals and objectives.
Absolutely. And, I think it's fitting we're talking life insurance after we just talked about Poppy too today. But
Yes.
You're right. It's hard to know what's available out there for you when there are so many talking heads. And I will tell you, I get a TikTok or an Instagram reel or something like this from prospects and clients alike sent to me at least once a week on this particular topic. And
Interesting.
most of the time, what's sent to us is not factual. So know that what we're talking about right now, you need to work with a professional and not just a talking head or some random person on social media about, because you need the person, like Gerry said, who can help you figure out if this fits into your plan or if this passes the sniff test, because when it sounds too good to be true, it usually is too good to be true. So be careful of some of that stuff you're going to come across on social media when it comes to this topic. And know that what we're talking about right now has gone through compliance. We want you to be prepared with the facts, and that's why you meet with a professional like us.
We're not just winging it here and putting it on TikTok. There isn't a compliance for a lot of the finfluencers, as they call that, right? So,
Absolutely.
So pick up that phone, 314. Well, you may be holding it while you're listening to this. I don't know, pick it up, whatever. 314-442-6476, or go to rickenfinancial.com. And remember, they've got YouTube, Instagram, Facebook. They've got this material, these podcasts in many places for you. And, of course, Apple and Spotify and other podcatchers too, to be able to do this. And if you know someone that needs to hear this, maybe you know someone that has been finfluenced and they need to actually hear from professionals, shoot them the link and let them know what you've been hearing, pay that benefit forward there. Well, Heidi and Gerry, thank you so much for spending some time talking about this today. And next episode, we're actually going to wrap up what's become now will be an 8-part series on this topic, tax diversification, but so fitting that it's tax season. So thank you.
Absolutely.
Our pleasure.
Yeah, the pleasure is mine. And thank you to all of our listeners and to our producer, Brandon Benefield, for putting this all together. And we always leave this in the right way with the right uptick. Gerry, every day
is a holiday.
And Heidi, life is short.
Laugh hard.
And Godspeed to Poppy. This has been Kicking with the Rickens, redefining retirement. And we'll catch you here very soon.
Insurance products are offered through the insurance business Ricken Financial LLC. Ricken Financial LLC is also an investment advisory practice that offers products and services through Impact Partnership Wealth LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Ricken Financial LLC are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Ricken Financial LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Ricken Financial LLC.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.
Tax preparation and tax advisory services are offered through Ricken Financial. These services are not offered by IPW and are not subject to investment advisor requirements. These services referenced are an outside business activity not offered through or supervised by IPW.